This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Well, hello, good morning, and welcome, everyone. It is Thursday, November 6th, and this is the AgYield War Room. I, of course, am AgYield Marketing Manager, everyone's favorite backup host, and still blocked by Sydney Sweeney on Instagram, Jack Coakley. If you got any questions or comments today, please feel free to join the discussion. Post a comment anywhere you see fit, wherever you're watching, and maybe after the show you have a question. Hey, no problem. You can always reach us at info@agyield.com. Let's get some Brian-style overnight numbers. Brian, what do you got?
All right, thanks, Jack. D's corn overnight down 2 1/4 at 433. Jan beans down 11 1/2 at 1122 3/4. And D Chicago wheat down 8 1/2 at 546 1/4. So we'll see what's in store for us today.
Well, that's a perfect segue, Brian. You know, we are very excited to bring Brad onto the show today. And with new faces, I believe calls for new segments. So I would like to introduce everyone to a brand new segment I'd like to call The Hot Seat, presented by AgYield. Welcome, everyone. Welcome to The Hot Seat, presented by AgYield. You might be wondering, we are AgYield. Why would we be presenting it? It's for potential sponsors in the future. Anyway, in my AgYield branded hat, I have the names of all of our consultants over here on the side panel. I will pick one person's name, and they are in the hot seat, which I'll explain in a little bit. So there are multiple papers in here.
Fun. Here we go. Hope there's random commodities in there too.
Yeah.
It's Brad.
How could we possibly have known?
They all say Brad in there, don't they?
They most certainly all say Brad in there. Anyway, Brad, welcome to the hot seat. Here's how we're going to play. All right. Everyone here, in the order you see them, will be asking you a grain market related question. It is your job to answer as authentically and as accurately as possible. Should anyone here on this panel decide that you are phoning a question in, or maybe you're just, you're kind of limping into answering a question, they can open up to a vote. Majority takes it. The punishment, another question. Okay, so here we go. Brian, any questions for Brad? Oh, and they can be personal too. It doesn't have to be.
Oh, nice.
Oh, wow.
Okay. Doesn't have to be grain related, huh?
Yeah, that could go really sideways. Brad, even with the government being shut down, we still have some sort of a direction on, what the funds are doing in corn and beans. Can you give us a little insight of what you've seen on that front?
Yeah, we don't have like those official commitment to trader reports every Friday, but we get a pretty good estimate every day here, and they're usually chasing momentum. Corn, I think we're estimating about short 40,000 with the funds. So they've been lightening up. I think middle of October they were short about 130,000. So yeah, they've been lightening up on the recent rally here. And then soybeans, I think they're showing about 150,000 long from the fund. So same thing. They went from pretty much in that flat position middle of October and been chasing this rally and trying to catch some of that money. So, don't know exactly what that means. It could be a little bit more volatility in the beans on any kind of pullback with them exiting, but I guess we will see. So I think
that's good.
That's all like that.
That's good. Ryland, you're next.
What else? I'm not prepped for these.
I don't know. That's pretty prepared,
I don't know,
man.
Yeah.
I'm pretty impressed. Brad, what do you think? Is China going to honor these purchase agreements so far that we've seen from this current U.S. administration?
Good question, Ryland. Yeah, I think it's just maybe the details and how they see it versus how maybe we see it. So I think we put out, when they said 12 million metric tons this year, we were looking at it like a full marketing year. We came out with it as it's going to be bought by January 1st, right? And then I think China also already bought, it was close to 6 million metric tons earlier in the year. So they're going to use that and say, we already bought 6, we only got to buy 6 million more tons by the end of the year, you know, and that's just going to kind of take a big hit to like balance sheet, I guess, and probably going to be tough to kind of hit those expected numbers on like that they're putting out for WASD if they don't live up to their end of the bargain. So are they going to do it? Seems like they're trying, but we're starting to get like Reuters reports, but we just don't have those kind of daily flash sales and stuff to get exact. So hopefully they open up the government and we start to get some more exact figures. So
Lovely.
Very good.
All right.
Lovely. Good job, Brad. Look at that.
Yeah,
What a hot
killing
seat.
it, all right?
Jeez.
Killing it. One last question.
I don't want Jack's question.
Jack's
You want my
question.
Brad, listen, you know, I wouldn't claim to be an expert, but you know, there's whispers online, there's maybe even whispers in the war room about this China deal not being the saving grace it needs to be for soybean farmers. All right. If you're president for a day, well, first of all, one, is it true? Would you agree with that statement? And two, if you were president for a day, what would you implement to help out the soybean growers of America?
Good question.
Wow.
So I don't know. I guess overall for soybeans, they probably need some more long-term commitments if you're looking at more presidential stuff. So like to have these massive companies add in capacity for like soybean crush and all that. It's tough to do it when you have changes every 6 months. They're not going to commit millions of dollars to infrastructure and moving companies for stuff like that. But is China purchasing 25 million metric tons a year a saving grace? You would think so, but I think China also likes to pay, you know, they're going to buy the cheapest beans no matter what they agree to. So they still have, I know they removed some trade constraints, but they still have tariffs on beans. As we said, as of today, it might be 13%, something like that. But so still we are not the cheapest versus Brazil and Argentina, but yeah, 25 million metric tons a year is definitely, you know, definitely helps a ton. So we got a lot more kind of domestic use here compared to when we're looking at old numbers when they were purchasing 25 million. But yeah, I don't want to call it a saving grace, but it's definitely a step in the right direction. So
There you go. Standing O.
Oh, standing O. Wow. Thank you for tuning in. This has been the Hot Seat presented by AgYield. Oh, I just found out there are sounds on our streaming platform, so that's
dangerous. You just keep
gonna
on playing that
hit the
gong
mute
for a while.
button. So
Yeah.
Okay, yeah, good work. You earned that mute button. All right, Brian, anything to add beyond hot seat related questions?
Yeah, thanks, Jack. Yeah, I mean, it was a really great rebound yesterday in the market after Tuesday's weakness, you know, with the rumors of, you know, private Chinese buyers buying, you know, Brazilian beans. You know, such a good comeback yesterday that, you know, GM beans actually was trading a year plus high before they retreat overnight. I think the market really kind of needs an actual, you know, physical sale by China with these beans and kind of give us a little bit of guidance on this first 12 million metric tons coming into the market. So until that, you're going to get volatility. It's going to be really choppy. I think, you know, now that the market's kind of already kind of, you know, melted in, you know, the framework deal with the bean, you know, purchases from China, we actually need to see something more out of that to get some better direction to the upside. Also, I think what the market's going to have to start looking at on the bean front too is South American weather. I just kind of did a little deep dive into that the other day. You know, they got a 71% chance of having a La Nina year this year. So if they do run into some issues with us having lower acres this year, and if China continues and commits, I mean, they really didn't step out of the box with the 25 million metric tons for the next 3 years. That's just kind of par for the course for them. But it's going to be interesting to see, you know, once they get these 12 million kind of done, do they start coming to us even more because we're the only market in town for the first 3 months until, you know, South America comes back online in March. So that'll be interesting to see. And then, you know, with the private analysts, with corn and beans, you know, with S&P Global and FC Stone, both at really record, you know, yields for both corn and beans. It's going to be a nice little bit of a guidance come next Friday when we finally get a WASD report. So that's going to continue to keep volatility in the market until then, and hopefully give us some better direction where we're at. So, I mean, just talking to our customer base, our growers, it seems like corn finished off stronger than expected, and beans kind of disappointed at the end with the dry August and September. So we'll see how this all kind of plays out and go from there.
Love that. Thanks for that, Brian. Ryland, let's get your take on some grain-related stuff, and then we can, shimmy on over to livestock while you're at it.
Yeah, absolutely. Well, I mean, like corn obviously has been kind of trying to follow beans here. I mean, we were getting up to new highs for the move yesterday, and it really looks like we're knocking on the door of that 200-day moving average. I think you're hitting some of these really important kind of technical levels here, and it seems like you're giving guys a chance. I mean, I think a lot of the focus that we're starting to see, or at least Brian and I were talking about it yesterday, Jason and I were talking about it yesterday, but it may be a little bit early, but I think it's time to start maybe focusing on the 2026 contracts as far as risk management goes. I mean, you're starting to see, $11 November beans and, almost $4.70 corn for new crop corn. So there's a lot of different strategies. I think we were kind of going back and forth yesterday, for short dated puts versus, something like an accumulator, just kind of those parameters. But I do think it's time just to start looking at that. I mean, we're getting the opportunities here. You've been feeding the bull and beans pretty much every day here. Obviously, with the competition with South America, that may start. We're starting to see things kind of level off, maybe a little bit here, but we'll see how that goes. So I think just overall a healthy little setback here ain't much of a problem. So we'll just kind of wait for the next headline or some more corroboration. I think, the data dump by the WASDE is certainly going to help, but I don't think it's really going to change the sentiment too much as far as our big demand partners, if China's going to stick around or not, if they're going to adhere to these commitments or not. So obviously a lot of question marks there, and I think everybody's just dying to see what really this report comes out to say. So overall, I mean, it's been a good move, a little weakness overnight, but I think it may be starting time to look a little bit further out than just the front months here. On the cattle side of things, limit down, locked limit down, just some big follow through yesterday. There really wasn't much bad news. I think just overall, there's kind of a change in sentiment here. I think you're actually getting some new spec selling coming in here just because you've had the administration now pretty much out there and say that they're, at least the ag secretary is saying there's no date to reopen the border. There's reassurances that they're going to take all the necessary precautions before they do so. Nobody knows what the plan is, if it's going to be a phase reopening or if somebody's just going to come and say, open it, we'll deal with it as it goes, as far as screwworm goes. So there just really is no plan. And I think you're freaking the market out quite a bit, just the fact that it's even here. Obviously, Trump wants that border open to depress cattle prices right now. This is going to be an ongoing fight, and the market's scared of that right now. So overall, we saw a little bit of cash trade yesterday. It was about 3 to 4 lower from the previous week, looking at 230 and a half in Nebraska, 232 in Texas. So that's pretty weak numbers, but overall, you've got a lot of negativity kind of priced into the board here. You've got a lot of panic selling. You've got a lot of liquidation. Open interest was actually up yesterday, so it does look like we're kind of taking a little bit of money out of the front end of the market, maybe moving it a little further out in general. So, and on the hog side of things, actually got a little bit of support, oddly enough. Even with cattle market lock limit down, hogs mustered some strength here. Cash market was up pretty good, up $1.30, right around 86. But on the other hand, carcass levels were down. So seasonally, we should be trending lower here as far as cash goes, and you baked a lot of that into the market. So now it's kind of show me time. Cash can actually find some stability here. Maybe we put the cart before the horse a little bit too much. So wouldn't mind seeing a little bit of follow through, especially just the pork market and the hog market just seems impervious to any of these Chinese headlines, that there's no pork on the table, sadly. So we'll see if any of that changes. But right now, the market's not convinced that that's going to be any part of any kind of trade agreement at this point. So that's all I'm seeing here, Jack.
Okay, well, thank you for that. We appreciate that, and we appreciate you for tuning in. If you wouldn't mind, send us, hit that like or subscribe button. It helps us out with the YouTube algorithms, and it gets our show out to a wider audience. So, thanks to everyone that helps support the show. We just hit 1,000 subscribers. Very excited about that. Next stop 10,000, 50,000. Until we get one of those YouTube plaques, I refuse to quit. So very excited.
What do you get for that 1,000 viewers?
Yeah, what do we get?
I think for 100,000 subscribers, you get a silver plaque, and then for 1 million, you get a gold plaque.
So for 1,000, you just get what, a pork chop?
Yeah, you get not a handshake. I don't even know if I got a notification from YouTube that said, "Good job on 1,000. You'll get more views now."
All right.
Thank you, YouTube. So yeah, be a part of the growth, and be a part of the show. Anyway, we're doing this every day. The markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments today. Especially appreciate Brad being our inaugural hot seat
recipient. Brad.
Yeah. He's you did a great job. Happy to have you on the show. And hope everyone has a great day. And we'll talk to you tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.